currently happening shouldn't actually be happening, right? If you just listen at some of the arguments and the narratives out there, just going back a couple of weeks or months ago. What am I talking about? Well, I'm talking about the recovery in NIOs. So let me talk you through a couple of charts here. Earlier today, I put out a tweet. So this is my Twitter account, by the way. You can go there and follow me, mm_85. That's where you'll find me. And this is a video of something that shouldn't actually be happening, but is happening. You see truckloads of NIO cars that are being delivered to delivery centers, so in order that they can find a customer. And this is now reflected in the weekly sales numbers, which today we got NIO up here at number 3 with 6,700 cars, and yeah, pretty insane number for NIO here, considering that they're up here with Huawei's Aito and Li Auto. But more on that in a second. But what I'm always saying is, don't look too much at these weeklies. What you want to see is the trend. And here you have a trend. This is NIO, that's Waylai. The weeklies over time, starting from week 1 of the year, in comparison to Tesla. So Tesla, you see here the Model Y, and in red, the Model 3 in comparison, which seems rather flat for now, but it may change with the coming quarters. I'm not betting against Tesla here, but what you can see clearly is that this is something that possibly shouldn't happen, but is happening, that NIO is almost showing a hockey stick here in terms of delivery, right? But what's important for us is what I've also pointed out earlier with my monthly delivery numbers and the chart that I'm usually doing to track the run rate. So this one is adjusted for business days, just as a proxy. In China, you have people working even if it's a Sunday, and cars sometimes get delivered even on a Sunday, but you also have those holiday periods. So this chart should be more accurate and is showing you the trend over time for all of those months. And you see that, yes, it's fluctuating quite a lot. It's very volatile, but it's always in this upward trend. And so, remember these periods where we have been falling off of a cliff for some time. All of the narratives that have been out there regarding how NIO cars are not designed for the audience, and therefore it's not finding any buyers, right? So didn't we say that the ET5 is a dead product? Well, it doesn't look to me like a dead product. Is it a problem that it's not having a horizontal screen? I'm not so sure about that. Is it a problem that there is not enough space for the foot if you're sitting in the backside of the car? Is it a problem that there is a problem with the seats or whatever? We've heard all of these stories about it, and we've heard how Li Auto is the darling of Wall Street and the Chinese consumer. And now we're up here with Li Auto, only 2,000 cars fewer sold this week. And this is not a fully electric car company. Aito, the same. It's not selling purely fully electric cars. And so NIO is up there in number 3, and this is very, very important because it's basically leading the new EV players here, the fully EV players. You have others like Zeekr, you have Xiaopeng. Xiaopeng now only selling almost 1/3 of NIO's in the volume, despite the fact that they have much lower average sales prices. And the challenge is, if you look in the future, and investors should always look at the future, that this is how the market is going to look. So in blue, you see the electric vehicles over time and the market share, which they will gather, or not the market share, actually, that's volumes here, versus the hybrids, which will around 2026, 2027, that's kind of where this is like the largest chunk of this market. From that, it's stagnating for a little bit and then shrinking because electric vehicles are taken over. And so Li Auto is now facing the difficulty of transitioning to this blue bar here, fully electric vehicles, but they're only selling a handful of Li Auto Mega, this MPV model, which is rather expensive, but currently, the question is whether or not they can transition. And NIO, meanwhile, making the next jump here with Onvo soon. Let's see how well this can be. Now, this shows you how they are trying to be cost efficient here by using NIO delivery centers that are also Onvo service centers and delivery centers at the same time. So that should help to do the co-branding, but also be lean on the cost side. But overall, again, the topic here is, how is it possible that all of this is currently happening despite NIO was basically dead in terms of deliveries if you asked participants all of the time, right? So it's now doing almost half of the Tesla sales in China and has the better trajectory here. And this is at the early stages of NIO, not even having the sub-brands. And the reason is that it never was about the cars. The product has been fine all along, but it's about long-term versus short-term thinking and the right way of marketing those vehicles. And that's currently happening. And we hope that this can continue like that because, again, to keep my mantra here, NIO as a brand, just as the NIO brand, should be fine if this trajectory is keep on going like this. We don't really need Onvo in order to be a successful case in the end, but we do have Onvo, right? So see this as a, in my opinion, not yet priced in call option. In fact, if you are looking at some of these growth rates, so here we have them, NIO year-over-year monthly deliveries up 233%, Xpeng up 33%, Li Auto up 24%. Then year-to-date annualized year-over-year growth rate, NIO is currently on a trajectory of growing 50% more or less year-over-year, Li Auto 30%, Xpeng 26%. Yet the stock price, if you compare that, like starting from 1 year ago, NIO and Li Auto down there, minus 30%, Xpeng holding up quite well. There are always some financial metrics related to that. Like Xpeng really seems like having this invisible hand holding the stock high despite this underperformance on the fundamentals in my point of view. But that's the opportunity once NIO's fundamentals, the financial fundamentals and metrics are improving, and we hope to see that in some earnings in the future, then there will be no stop for holding the stock down, in my opinion. That's the opportunity there, but certainly right now, if I just look at that, the growth that's currently shown is not in the stock. The goodwill when it comes to what's the potential of future earnings that currently are not getting discounted because of the interest rates spiking that much, it's not in the stock yet. Nobody can tell me that this is valued as a growth company or a company with high future cash flows and future earnings. No, NIO is just valued currently as an unprofitable automaker that's not growing. That's where we are. It may stay there. Crucial to watch the Q1 and Q2 earnings, of course, but that's where we are. Just want to tell you this because so oftentimes we hear these short-term narratives and they are, during those times when things are not going well, they are omnipresent and they are distorting us from having this long-term look. So don't watch the weeklies, watch the trajectory, and currently that trajectory is just fine.